Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. This time around, we're going to be starting off with the 10-year Treasury note futures market, which to us was one of the most interesting markets over the past week. In fact, we talked about this market as being one of the most interesting ones even the prior week, and that's precisely because we've been able to witness price basically breaking through a very, very important former support area formed by these two dual swing lows. But if you really zoom out of the chart, we can see that the support basically dates back to quite a few years for this market. And just zoom this chart out a bit. So we just look at this, we're basically pretty much sitting not at a very at a single price level that's acting as support for the market here, or maybe even a bunch of closely knit price levels. We're basically looking at somewhat a thick price pivot zone marked by several instances when price basically found support off this region. And as you can see, we're pretty much sitting within that region now. For the short term though, it's interesting to see that the market over the past week basically broke out of these two swing lows over here and basically pulled back to this level, held as resistance, and continued its way down. So we have a textbook play of support and resistance here, where we have very strong former support turning into resistance. Our bias for this market continues to be the downside, although we understand that we're not exactly through the big important support zone, long-term support zone, but we do have all the fundamentals in place to see this bearish momentum continue, and that's basically founded off the fact that we have a bounce off a former support area, which should allow price to continue its way down. Although we're still cautious because we are at very, very long-term lows here, which means that we could see a sudden buying momentum come into the market. We could even see price basically trickle right back up above this level, then pull back, hold the support, and just continue back up, because we are at extremely long-term support areas for this market. But just looking at how the market is developed and basically how we consolidated for a very long time ahead of this move down, and then basically really just strengthened this down move from a consolidation phase to a choppy downtrend phase to a more mature downtrend, where we're now consistently seeing lower lows and obviously lower highs around here. So we have all the foundations in place for bearish momentum to continue. A key hurdle, of course, here was this major support area, and given that price has broken this area to the downside, pulled back to it and held as resistance, we have a logical reason to believe that price may just continue its way down further into the support zone, maybe eventually break it to the downside, and who knows, maybe develop into a long-term downtrend. Okay, so the next market we're going to be looking at is the S&P 500 E-mini futures market, which is basically taken off right from where it left off the week prior to last one. We discussed in last week's video that we're uncomfortable with the fact that this uptrend on the S&P 500 E-mini futures market that's been going on for a very, very long time now is slowly transitioning from a regular uptrend where you would expect regular periodic non-threatening pullbacks to a market that's just really very, very steeply rising. And we understand from past experiences that when a market rises extremely fast or falls extremely sharply, there is usually, not always, but usually a chance that it's basically headed for a target that it's going to be reversing from. Now, we're not exactly predicting a top for this market, nor are we suggesting that this uptrend is showing signs of exhaustion, or for that matter, even signs of an end. But we do believe that this market has been due for a major correction for a very long time now, and just the fact that price is accelerating so sharply towards important round numbers like the 2,900 and even the 3,000 big round number, which isn't very far away given the kind of momentum that the market is in, we could possibly see price retracing or pulling back into this uptrend and basically just consolidating and pulling back a little bit to gather some more steam and maybe for the long term just continue with the trend up. So we do have a long-term bias to the upside for this market because we still have no major signs of trend exhaustion at all. But just the way that we're seeing price accelerate so fast and so rapidly towards important round numbers, we would like to issue caution for traders looking to long this market and try and jump in on the bullish momentum that we're witnessing right now. Okay, so the next market we're going to be looking at is the gold futures market, which was another of the more interesting markets that we witnessed over the past week. And once again, this was interesting because we had price sort of break out of an important former resistance area. We had a very important swing high around here that price had found some kind of resistance at the week prior to the last one. But this last week, we basically saw price sort of push past this area and close strongly. The next candlestick, we saw a wick to the upside, which suggested some kind of buying weakness, which you would normally expect when you see price basically push past important levels, because price will usually want to pull back, test the area as support in case of former resistance, and then gather some fresh momentum and order flow to be able to take higher into the direction of the existing trend, which in this case is obviously to the upside. However, we're also noticing that although we're sort of broken past this area, we wouldn't exactly call this a strong break because we're yet to see a more authoritative candlestick with a strong authoritative close above this more recent swing high. But we're also looking at some other important highs that are further to the left, such as this one over here, and of course we have another high around here. So like the Treasury, the 10-year Treasury no futures market that we discussed, this is also a market where we look at these highs as forming more of a zone here, more than a single price level. And so if you look at the market in that perspective, you can see that this isn't really a very strong and authoritative push past this former swing high. So we wouldn't really be very excited about the move up that we witnessed this former week, and we would like to see a more authoritative push past not only this more recent swing high, but also maybe past all of these levels in here, before we can really put our bets on seeing this market go a lot further up. A major difference between this market that we're analyzing right now and the 10-year Treasury no futures market is that even though we're sort of in the same situation in the sense that price is sort of sitting at these important support and resistance zones around here, with the gold market, we did not see a lot of momentum and a lot of buildup as price basically landed itself into this former resistance zone. So we've seen a very sharp accelerating move into this level, whereas in the 10-year Treasury no futures market, if you would recall, we had basically come off of a very, very extended sideways consolidation phase that transitioned into a more choppy momentum building downtrend phase, and then into a more regular downtrend that basically saw us land into that key support zone. Over here, we're pretty much sitting at a very important resistance area, but we do not have the same kind of a build-up prior to this move up that we're seeing here. So that really makes us believe that we may actually just trickle right back down if we do not build on any kind of momentum to the upside in the following week, because we are at an important resistance zone here. Another perspective that we like to shed light here on is the fact that we discussed about this consolidation box over the past week, and how usually the mid-range of these consolidation boxes will serve as important support and resistance zones for price in the future. We saw that happen over here when price basically bounced off of the mid-range of this consolidation box in the past, and you can see that we've actually just been able to push past this level, this mid-range level of the consolidation box, which may actually end up holding as support and allowing price to build that momentum to the upside that a lot of traders looking to buy into this market would normally expect. But once again, we are yet to witness a strong close above all these important former swing highs to be able to make up a reasonable expectation the price is going to continue its way up into this market. For now, we're pretty much on the sidelines for the short term for this market, because we believe that a lot will really depend on how price unfolds the following week. If we see a major bout of selling coming into the market, it could well basically mean that price has found a lot of resistance at this key zone around here, and we may just trickle right back down, which wouldn't really be a surprise at all, given the fact that we've sort of just accelerated into the level rather than really display any signs of major consolidation and ahead of the move into this important key resistance area. The flip side of the coin, of course, is that if we find the price is holding as support at the 1350 level around here, and we see an authoritative move back up, maybe past all of these important swing highs to the left, we will then probably have a reasonable expectation that if price pulls back to this level, it will then likely hold a support, because once again, it's an extremely important resistance area, and extremely important resistance areas tend to serve as extremely important support areas as well, more times than not, of course, not always, but yeah, more times than not. So we would then probably expect that price will likely just continue its way further up. Okay, so the next market we're going to be looking at is the light crude oil futures market, which has basically been in a very consistent and a very sustained uptrend over the recent past. We did have a minor hiccup in the past when roughly around this area when price was consolidating, basically around the area where it last consolidated back in April. Really, but since then, as price basically broke out of this minor period of consolidation, it's just been bulls all the way through. We expect this momentum to continue, because if we zoom out, we do not see any major areas or hurdles that could really kill the current momentum that we're seeing towards the upside. That is up to the levels where we have these swing lows. That would roughly line up with 75 and the 7600 levels. But given that we're currently trading at around 66, that's still way far off, and any calls up to this area would at best be very ambitious. But just looking at the momentum, the bullish momentum that price has been in, it's probably not that unreasonable to expect for this momentum to continue until price is able to hit the 7500, 7600 levels, where you could potentially expect the major former support that we just looked at in terms of the 3-4 important swing lows to the left way far back in the past, to now act as potential resistance for price and really allow for some selling to come into the market. For now, for the short term, we just continue to expect this market to keep ticking higher. We have all the foundations that we typically expect of an uptrend. We do have regular periodic pullbacks. In fact, we had one the week prior to last one, and this former week we just basically resumed the uptrend. So we can see it was an entirely non-threatening pullback, just a minor phase of consolidation, which is usually needed for a strong long-term sustained trend to continue. So just going forward, we expect this momentum to just keep allowing prices to push higher. Next major target, of course, could be the 70 big round number, and then, as we discussed, the more important levels towards the 75 and the 76 price levels. Okay, so finally we'll look at the euro currency futures market, which only recently broke out of again a period of consolidation. On this candlestick over here, we had a very strong close to the upside. We did not pull back to this former area of resistance to test it as support. We just continued our way up, although we did discuss in last week's video, if you recall, that this market really doesn't have a lot of space to be going up north. We discussed how there was an immediate trouble area for price around this level, just above the 1.25 round number. We have some former support over here and two instances where price held as resistance. A very conspicuous and obvious support and resistance level over here that could potentially cause price some kind of trouble. And then, of course, if you roll a little bit further back, we have some even more important areas to consider here. More precisely, this major support and resistance level here. We had several instances of very prominent support and resistance off of this level. And as price basically nears this area, which is close to the 1.28, 1.275-ish area, as price closes in on these levels, we could expect more potential trouble for the bulls as far as this market is concerned. In fact, we're already seeing some kind of selling coming in the market, which is right off of the bounce of the more shorter term 1.25 support and resistance level that we just discussed. We basically have a very, very strong looking bearish pin bar candlestick pattern, or sometimes also referred to as the bearish hammer pattern. Although we suspect that the bullish momentum for this market may actually just be strong enough to allow price to continue to tick higher. We already have some kind of support that could come in at this minor period of consolidation should price try to continue to push further down. We of course have the market overall breaking out of this more elongated consolidation phase here, which usually allows price for more space to the upside and the bulls to be stronger for a little bit longer than you would normally expect when price is not basically breaking out of periods of consolidation and wedge patterns and other chart patterns. So just going by the story that we're seeing develop here, we do believe that price may actually be actually just continue to push higher here eventually, breaking past this more shorter term area that we discussed around the 1.25 level and more closer towards the 1.275 and the 1.28 more longer term and major support and resistance levels that we can see from history further down the road. So for now, although we're seeing some kind of bearish activity come into the market with this bearish hammer or pin bar pattern, we do continue to hold a more upward bias for this market, just given the momentum that we're seeing bulls in, unless we actually see price maybe trickle down even underneath this former consolidation area. That could potentially lead to some trouble for the uptrend that we're looking at, and the price may actually just pull back to this former resistance trend line here of the wedge pattern that price broke out of earlier on, because we know that price really hasn't pulled back to this level to test it as support as yet. So unless price is really just ends up crashing down and basically breaking all of these former minor and major resistance levels and not use them as support at all, we suspect that price may just actually continue to trickle higher, because we're more looking at the 1.275 to 1.28 levels to be the real target for the bulls as far as this market is concerned. So while our bias continues to be the upside, we're still looking at this market with a little bit of caution, just given this more recent bearish activity. A lot will obviously depend on how the market unfolds the following week, whether the bulls will continue to be in control and basically wallate and nullify this bearish hammer pattern, or we're going to see some bearish activity as price pulls back to this former minor consolidation area, or maybe a little bit further down the road to this former resistance trend line over here.